I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick.
Thanks for inviting me on, Jim.
We hear that there's some merger talks going on between Dominion Diamond and Stornoway Diamond. Any thoughts on the diamond market right now?
It's interesting. You know, I've always followed it kind of tangentially, and let's just say that over time, the only force in the business was De Beers, and they kind of lost control simply because too much supply was coming on stream from Russia and Australia. So it's an interesting business. I noticed a story last week that some average Joe found what may be the 12th or 13th largest diamond ever discovered. So not that you can pick that up in your backyard, but if you're, it's amazing that there's still gem quality stones of that size buried, and probably a whole bunch more. So I don't know. I guess the diamond business is in the premium category. We see a lot of premium retailers right now. The very high end, they're having hard times because even the buying from China isn't what it used to be. So I don't know what the details are of the merger, but I just wish them good luck.
Canada has become a major player as well in the diamond business. Canadian diamonds known for their clarity and purity, so much so that they laser in little polar bears on them to mark them as Canadian, and now I hear counterfeits of those are flooding the market as well.
Well, you know, the technology puts diamonds in somewhat more of a flux than the likes of De Beers would prefer. You have a synthetic diamond process that creates colored diamonds in any flavor really, and the irony is that the only way you can tell the fake diamonds is that they look better than the real thing. You know, if you put on a jeweler's loop and you see a diamond with no flaws, you know you're looking at a synthetic. And there's other applications of synthetics that go into computer chip production. And I don't know how far along that technology is, but I know there was a former military man who was focusing on the jewelry and sale of synthetic diamonds to essentially ramp up for mass production of diamonds that would be usable in computer chips.
Taking a look at the equity markets, they seem to be doing a slow rollover.
Well, it's anybody's guess. You know, I within the last week had my subscribers take two positions. One, a small put position in the diamonds, and the other, this morning and yesterday, we went long VXX, which is a vehicle that you use to play volatility, the VIX. And, it's a little bit, I told them to be ready to kiss that money goodbye because it's always a risky play, making a bet against a bull market that's been chugging along. We're now in almost exactly begun the 9th year of the bull. And also with respect to the VIX, if you look at the weekly chart, it is relentlessly down, 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 down. And anybody who wants to play a spike in volatility is really bucking the odds, because if you buy calls in the VXX, you might have one or two exhilarating days for each 90 to 100 really ugly days that you have. So these are two very much against the trend bets, but they're for a technical reason. I've got the S&Ps trading very close to a major chart target on the weekly chart. This is a rally pattern that took more than a year to play out. And in the case of the VXX, I used my hidden pivot method to project a downside target there at 15.50. So let's just say I'm placing my bet at a technically opportune time, but it's still a speculative bet. But you can feel the Trump rally kind of fatiguing, and in a practical sense, you get a feeling that the market has extended way beyond whatever optimism you might have with respect to Trump's policy regimen.
And of course, we have yet to see those policies enacted, and it does take a long time usually to get things done in government.
Well, it really does. When they talk about deregulating and tax reductions, that's all well and good, but you know that it's going to be a long time before you and I, or General Motors for that matter, sees a reduction in taxes. But I think the basic idea behind the stimulus, especially if it stimulates small business, is going to be a very, very big plus for the economy. Even so, I think the market has gotten way ahead of itself.
If we do see a pullback, will that be enough of a problem that even if they do more spending on infrastructure, it won't be enough to prevent a downturn in the economy?
Well, there's so many things that could go wrong, and I've read a couple of analyses that suggested that all the infrastructure lumped together is not such a huge piece of the GDP. The good thing is, though, that it's really shovel-ready work, and it does put people to work. It's real jobs. It's not like a smoke and mirrors internet company like Uber or Snap. It's the real deal. So I think it'll be good, but also even if we put massive investment into capital improvements in the U.S., essentially reconstructing roads and bridges and things, that's a long-term payoff. It takes a long time to essentially pay off a new road with the traffic that it generates. It takes a lot of time. So everything that's good that could happen is on a pretty long lead time, with the exception of Obamacare. Obamacare was really the single largest tax ever levied on the American middle class. And I think to the extent that Trump, if not all of his Republican cohort, even if they're not behind all the changes, they're going to be the relief will be felt relatively quickly by small businesses.
We'll have more with Rick Ackerman right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you have much optimism for the crude oil patch?
No, I mean, I think we've talked about that before, and I think we have, Jim. I was never quite persuaded by the supply side story. It seemed like there was always this buzz about cutbacks by the Saudis, or less Iranian natural gas production, or some sort of insurrection in Venezuela that totally throttled the oil supply from there. And to me, the supply side story is a phony. It's really drummed up. I would say that real bull markets in energy occur, they're driven by demand. And in that respect, the biggest demander of energy resources at the margin is China, and I wouldn't say their economy's going great guns. So I don't I don't really believe this crude oil rally, and I actually have a target now. This is for NYMEX futures down at $43, and that's been my target since crude was up around 54.
Natural gas did have a nice winter. Will it continue into the summer?
I live in Denver, the Denver area, and our home is heated with natural gas. And when I look over, long stretches of bear market in natural gas, you have to just sort of curse the furies, because natural gas came down from, I'm looking at a weekly chart here, and we've got it up around $8 per whatever it is, zillion cubic feet, and a recent low, this was in early 2016, that recent, of about $2.32. So we've had, I would call it a dead cat bounce from that low in early February, $2.32. The recent high in late December was $3.60. But I think that's about it, and I'm a bear on natural gas prices.
Isn't the world pretty well awash in natural gas right now?
Well, so we read, and it makes the rally. You think, what is going on here? But it just illustrates the point that even bear markets don't go in a straight line, and bull markets don't. There's always corrections. The most extreme instance of that right now is the strength in the euro. I guess it's a question of buy the rumor, sell the news, and the rumor was that, hey, Le Pen was going to win the French election, and of course that made it possible at least that France would pull out of the euro, and so here we see the euro rallying. It's really confounding if you're a trader, but again, nothing goes in a straight line, and I think that the rally in the euro has gotten legs from the results of the Dutch election, because Dutch election, the Trump candidate, if you will, I have trouble with his name, Geert Wilders. Well, he picked up a few seats, but it wasn't so dramatic a victory that we could say that Le Pen has clinched France. So this has given the euro a breath of life, but I see that as a dead cat bounce too. The June euro contract currently trading about $1.08. I think it's going down to 80 cents eventually.
I was just going to ask, when do you see it hitting par with the U.S. dollar?
That certainly felt like destiny for a long, long time. And of course, I'm really surprised with all the things rocking Europe, that we're seeing any kind of rally, but I do think it's a dead cat bounce.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, I've heard there's several new gold discoveries in Africa, some of them quite large. Is that going to change the gold market?
I don't think so. The expense, even in Africa, of getting gold out of the ground is always going to be a limitation on supplies. And when you have certainly lower energy costs is a big factor, and I think that's supportive of mining operations, not just in Africa but elsewhere. But I have to say, every time I've gone on a mining tour, it's usually in some place like Mexico or Nevada or California. We're always reminded of the enormous political differences, let's say the regulatory environment that domestic producers face, and also producers in Canada compared to Africa. Africa is no cakewalk, and I hesitate. I'm a little skeptical that we're going to be seeing the kind of a boost in supply from these new African mines.
Well, in Africa, your biggest problem is you never know when a new civil war is going to break out.
Right. It's a very unstable situation there, and when I think of it, may be a little harder to get ore out of the ground in Nevada or California, but when you factor all those political problems and the corruption, the very uncertain environment of the African mining industry faces, I'd rather be in California myself.
Well, China seems to be putting a lot of effort into Africa right now. Are they looking long term?
Well, most surely, and they're not there speculatively to double their money. You know, it's really a resource play, and China, like every other nation in its stage of growth, is looking to lock up as much supply as it can in all kinds of mineral resources and just natural resources.
I know high tech gets all the attention with the massive buys and sell-offs and so on, but are people better off to stick to basic things that actually are products that you can buy, touch, and feel?
I think you can never go wrong by following Peter Lynch's advice, and that is just invest in what you know. You know, what do you know about, like, semiconductors, for instance? But on the other hand, if you've been in a Sears store in the last 40 years and tried to exchange a lawnmower or something, it was telling you shouldn't own Sears stock. So I just say trust your instinct. I know a young guy who worked on the Pacific Exchange when I was there, and he had a ton of every penny he could scrape together, he put in Harley Davidson stock because he simply liked the motorcycle, and it was a great investment for him. The guys who cut my hair at Al's barbershop in Mountain View, well, they didn't miss the significance of the Johnson & Johnson minoxidil, which would grow hair on guys' heads. So the barbers were the first people to resonate with a hair growing formula that actually worked. So, you know, which is as much as saying that in our lives there's always going to be companies out there that are doing things that we can understand, and that's where I think you should start with your investments.
I know in Canada, with marijuana said to be legalized sometime over the next couple of years, that people thought that's going to be the hottest thing going, and already there are warnings that there are just too many marijuana growers out there to supply a market that may not meet the, you know, demand that much.
They're in their third shakeout, you know. I wish all the investors in these little marijuana companies good luck. I know a Canadian venture guy who's sort of taking the slow path, like 10 years to the point where the medicinal properties of marijuana will be recognized and essentially incorporated into our healthcare system. But all the other stuff, you know, I live in Colorado, and we've been a few years into this marijuana experiment, and it's a tough business. There's no question that the retailers are making money because they're the ones taking out these double truck ads in all the local newspapers, but the regulatory burden is huge, and when you get a change of administrations and just on a whim, you know, you've got Jeff Sessions kind of agreeing with Trump that maybe a little less marijuana smoking in this country would be better. And, you know, Colorado at that point had thought, well, they'd worked out their differences with the feds, and there hasn't been too much heavy-handed regulation here in Colorado, but that environment could change. And it's a really difficult business, and even the growers, there's such a limitation on space. You need a very particular kind of warehouse, and you need huge power to run the lights for hydroponic growing, and just to rent a place to grow is enormously expensive. And I don't have to tell you that the black market price for marijuana here in Boulder, it's less than the store price.
Well, that's one of the problems the Trudeau government wants to address, is perhaps make it illegal to have private sales, like they're suggesting in some U.S. states.
Well, as the marijuana industry, in order to, one of the justifications for it originally was that it would the money would go towards schools and this and that. It's the usual blather. But the fact is that the competitiveness of the business is tending to drive the price down, which means that the stores will all have to operate at higher volume to keep their margins even. So what you wind up with is really eventually we're going to have really heavy-handed promotions marketing of marijuana, like we should all be smoking more of it, just so that the schools are getting all their money.
Of course, in Vancouver, where they have a lot of dispensaries, they have new bylaws that limit the distance, or you have a minimum distance between where a store can be and a school, 300 meters, I think, which is 1,000 feet. And if you take a look at most municipalities, most schools are within 1,000 feet of something.
Yeah, and then, that's where the feds did come into Boulder. They started enforcing that law, and a couple of marijuana sellers realized they were out of bounds by being in these school zones. And it's really tough. I know one small town here in Colorado, someone paid to buy what looked like an ideal marijuana vendor site. It was a gas station. They paid for the toxic site cleanup and everything else, and then and they had could have been $800,000 into this property, and the little town ruled, we've got enough marijuana around here, we're not going to let you open the store. So, anybody who's in that business, they deserve what they're making.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. Any questions for us can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.